What's up everybody? Welcome to the Stocks channel. My name is Corey and today we'll do macro technical analysis and we'll be looking at weekly charts of all the indices, the VIX and Bitcoin. So first up, let's take a look at a weekly chart of the SPX S&P 500 index. So let's crack open this chart and see what's going on in the stock market today. Alright, so on a weekly chart of the SPX, we can see that we did come down to that critical level right around 4150 intra-week, and we did close back above the other critical level we have at 4350. So you can see these critical support levels that I gave you are coming into play here, and the most important thing I would pay attention to on the weekly chart is going to be the Bollinger Bands. You can see they're very flat, and if we're going into a continuation of a bear market from here, we're going to see those Bollinger Bands expanding, allowing for more downside, which will ultimately allow for the weekly downtrend that we would see in a prolonged bear market. Now, real quick, I want to switch this over to a monthly chart because you can see we are not in an economic recession and we have had two red candlesticks on the monthly chart. Even though there is only one trading day left in February, I don't expect to see this candle going green by Monday. Obviously, I could be wrong, so you'll need to check again on how we close on Monday. But typically, if you're not going to be in an economic recession, you're only going to get a stock market correction, and we've clearly had a full-blown correction at these levels. So jumping back over to the weekly chart, it's very possible we satisfied the correction at that level right around 4150. We saw a lot of buyers of the dip at that level, close back above our other critical level for the week, back above 4300, and that might be all we get in this stock market correction before we start going back higher from here. So watch that very critical level right around 4300, because if we do start getting weekly closes below that level, we are more than likely going to see a continuation of this correction, which means we're more than likely heading into a bear market, which means we should expect to see more downside through the end of March. So SPX 4300 is by far the most critical support level to watch price action at, because if we start breaking and closing below that level, you're looking for the next legs lower at 4150, 4000, and right around 3900. If we go into the bear market scenario, I don't see how we don't go to at least 4,000 in SPX, and we could still go lower than that, fully close the gap, and touch the support trend line at 3,900. So because we're not in an economic recession, I don't think we're going down that low, but you never know exactly what's going to happen, so you need to follow the price action. From here, we do have critical resistance we need to break above, which is right around 45.35, and our 20 simple moving average on the weekly chart is sitting at 45.74. So by the time SPX gets back above 45.74, we should be looking a lot more bullish, and which means we could come back up and retest the previous all-time high at 47.82. So you really can't start getting bullish until SPX gets back over the 4500s, or at least shows signs that it can hold above 4300 at that very critical support. Jumping over to the bear bull survey, you can see that we have a ridiculous amount of bearish sentiment, with over 53% of the people that are now bearish, and only 22.9% of the people that are neutral, and 23.4% of the people that are bullish. So there's clearly a lot of bears out there, and those bears will try to short this market. So that could mean we have more downside in the near term, or that could mean we're due for an epic short squeeze and we're going to see a very impulsive bullish rally. Either way, this is normally a contrarian indication, so you never want to be in the side that's the majority, and right now that's the bearish camp. So when there's too many people getting bearish, typically the market will go against the trend and we will see a rally from here, but there's no guarantee exactly what's going to happen in the near term. This is more of a 3 to 6 month outlook. So it does look like better times are coming in the next 3 to 6 months, but still in the near term, we still do have a weak market and we are near very critical support levels. On the NDX weekly chart, you can see we came down to that critical level right around 14,000, but intra-week we did test the next critical leg lower, which was at 13,300. We saw buyers of the dip, and you can see that was well below the lower Bollinger Band, but on the NDX, we do see expansion in the Bollinger Bands, which is allowing the price action to walk down that lower Bollinger Band. So you can clearly see the NDX is looking a lot weaker than the SPX, and the 5 EMA on the weekly chart is below the 50 EMA. All these moving averages are negatively sloping, so you can clearly see a lot more weakness in the tech sector. So you still need to watch this very critical level at 14,000, because if we start closing below that level yet again, you're looking for a retest of 13,300, and below that we could be coming all the way down to 12,640. So watch those critical support levels, and you can't get overly bullish until we can at least get a close back above 14,600. On the Dow Jones weekly chart, you can see we did close the week below the weekly 50 EMA for the second week in a row, and we are watching very closely this double top look on the weekly chart, and we did not close below the neckline, which is right around 34,000. So remember, for a double top, we need confirmation of a close below the neckline, and we have not yet had that confirmation, so we can't call this a double top until we close below 34,000. If we do close below 34,000, we'll still have critical support right around 32,000, but more than likely we could see the Dow Jones coming all the way down to about 31,000 or lower if we do get that confirmed double top look. There's nothing bearish or bullish about this chart. It's completely sideways consolidation, and we've really been consolidating in the Dow Jones going all the way back to May of 2021. So the next bullish breakout will be back above 36,330, and your bearish breakdown will be when we start closing below 34,000, and everything in between is just going to be a choppy sideways trading range. On the Russell 2000 weekly chart, you can see we've tested critical support numerous times, and we haven't yet closed below this level right around 19,037. If we do close below that level on a weekly chart, we're very likely heading to 1700, so that will be a very critical support level. You could see price action is closing above our support trend line, but we're clearly developing a bear trend on the weekly chart, which means we could have more downside coming. Your bullish breakout in the Russell 2000 is back above 2138 and then getting back over the 20 simple moving average at 2185. This is very clearly a strong downtrend, so there's nothing bullish about this chart, but we are holding above support. So the moment that support level breaks down, it should be a quick trip down to 1700. So if you're looking to short the Russell, you're looking for weakness below 1937. On the VIX weekly chart, you can see that we are in a bull trend. So the VIX has been trending higher, making higher highs and higher lows. But you can also see that we're struggling to have the VIX close in the 30s. And we could see a lot of downward pressure every time the VIX tries to spike out. Obviously that can change, and we do have the bull trend, and we still do have the breakout look. So you really shouldn't be getting overly bullish with the VIX this elevated, and we really need to see the VIX getting back down below 23 and closing below 20 to confirm that we are going back into a bull trend. So there's a lot of uncertainty out there in the market, and there's clearly plenty of fear because the VIX has been elevated for the last couple of months. So just be cautious and watch the VIX closely. On Bitcoin, we're currently trading around 39,000, but you can still see the price action below all the moving averages, and this is still very clearly a strong downtrend. Now the Bitcoin bulls need to keep price action above about 32,000 or at least right around 30,000, because if we break below that level, we're coming all the way back down to 20,000. Your bullish breakouts on Bitcoin are back above 44,000 and then getting back above the 20 simple moving average, which is just below 50,000. So there's no way the Bitcoin bulls have control right now. This is very clearly a downtrend, and this is very clearly very weak price action. So don't get overly bullish on Bitcoin until it can at least get back above about 44 to 46,000. And even then, we still need to break back above 53,000 to start looking bullish. On the ARKK weekly chart, you can still see we're trending lower and we're still below our resistance trend line, and we really need to see a close back above about 73 to 81. And until we get a close above those levels, it's still possible we're trending down towards $50. There should be strong support around 60, but there's no guarantee a support level has to hold up in a bear market, and this is very clearly a prolonged bear market. So watch that level at $60, because if it does break down, we're going down to 50, but we could be getting a lot more bullish above the 70s, and definitely when we start getting into the 80s and 90s. You can see the weekly 50 EMA is all the way at $100, and that is a moving target because it's a now negative slope. So the ARKK ETF will be looking very bullish back above $100, but that is a long ways away. So jumping back over the S&P 500, this is still very clearly bearish price action because we are making lower highs and lower lows. But so far, we can see the bulls holding up above support on the weekly chart, and there have been no major breakdowns. So this is still in the category of just a stock market correction. Remember that most bear markets that last longer than 2 to 3 months are typically during economic recessions, and we are not currently in an economic recession. So try not to get overly bearish and watch those very critical support levels. And as always, make sure you have a very strict trading plan and you're managing your risk very closely in this very high volatile market. Anytime the VIX is above 20, you need to be very cautious because there's going to be a whipsawing market with bear traps and bull traps alike. Also, don't forget that I do have Bank Trade Alert, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. With all this market volatility in a brand new trading year, I think now is the best time to be a bank member. You can find out all the information about Bank Trade Alerts and how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.